Nestle, the world's biggest food company, posted an 11% rise in sales in the first 9 months of this year. CEO Paul Bulcke was in Shanghai for the earnings announcement, the company's first time out of China. I caught up with him to ask him about Nestle's outlook and China business strategy.
I've been talking about momentum, a continuum, an inner strength that's going forward, and I do believe the fourth quarter is going to be in line for what we have seen so far, which is healthy growth and a continuum all over the world, developing markets, emerging markets, together with developed markets. So that is what allows us to confirm our outlook, which is a 5 to 6% organic growth with margin increase.
What about food prices in particular? What's your outlook for food prices going forward in the near term?
Well, again, you have two trends. You have two dimensions, the underlying trend and the peaks. What we saw is that last year they really had a peak and they're softening. That's what we're talking now in the second half of this year. But underlying, we see the raw material prices going up slightly over time, which is actually, in my eyes, a healthy evolution.
Would that put pressure on your profits going forward next year?
Well, no. You see, the profit is based on creating value for the consumer. So we are creating arguments, something positive that the consumer values. That's where our margin comes from, not from reducing costs per se.
In terms of other large food conglomerates like Kraft has spun off some of its chocolate and cookie biscuits division. Would Nestle consider some demergers like that? Because you do have ice cream and chocolate where the margins aren't as strong as some of your other products, and it's not as healthy, right?
Well, not all businesses should have all the same dynamics, the same numbers, not all countries should have the same growth. And that's the richness of what we have in Nestle, which is that diversity in categories with their own dynamics. And we have that good geographic presence with their own dynamics. And that adds up and allows us to say, in all together, we can commit to a 5 to 6% growth and margin increase. There's something about this specificness of all these categories, and yet having them all together with one backing of one global company that uses its size and scale it up to be able to invest in R&D, to have very efficient operations in the markets, etc. I do believe there is quite a lot of strength there.
So that's a no?
That's a no.
In China, you've had several acquisitions. So right here, this Inlu as well as Hushuchu. Will we see any billion-dollar brands out of these acquisitions going
forward?
There
are there. Inlu is already close to $1 billion brand, and Hushuchu is closing into that. So we have billion brands already. China is a very sizable market.
In terms of China, what's your sort of target for sales, and how big is the market today for you?
My target for sales is really being dynamically part of the development of the country. So we are already sizable, and you heard it, with 5 billion Swiss francs. It's a very sizable. Yet at the same time, if you see the potential, we are very optimistic that it's going to grow very, very substantially.